Yo, what's up, everybody? My name's Jake Demai, and I own and run a bookkeeping company. And I love what I do. I love being self-employed. I used to be an employee. I did tax work for a long time, but now I own my own company, and I absolutely love it. It's the best thing I've ever done in my life is starting this business. And in this video, I want to talk about how I handle cleanups, kind of from beginning to end, my process. I'm not saying it's perfect. I'm not saying I am the best at it, but I do love cleaning up QuickBooks. I love taking a messy account and cleaning it up, recategorizing things, catching it up, reconciling. I love that. And I don't know if it's my personality. I don't know what it is, but there's something really satisfying about starting with something messy and then finishing with something clean, and being proud of the work that you do. It's kind of like if you mowed a lawn, before the lawn is mowed, it's messy, it's overgrown. You mow the lawn, you got the nice, clean, crisp corners and cuts, and it looks amazing. And you look at your job, and you're really satisfied with the work that you did. It's the same thing with bookkeeping, especially when you get good at accounting and you actually know how to make it look the way you want it to look. Because honestly, guys, that's half the battle. Is you might know what it's supposed to look like, but how do you get it there? How do you make it so that it's what you want it to be? And so in this video, guys, just from start to finish, I want to walk through from the first phone call I get to the very end, what exactly I do and how I do it. So let's jump right in. So guys, let's imagine, I'm kind of envisioning my own client here, but envision in your own head getting a call from a random person. You get a call and they say, hey, I need somebody to clean my QuickBooks up, and I need it to be done soon. I can give you all the information that I need. What is your price? What would this cost? And how would you do it? And so in this call, I typically ask a series of questions. I let the client do a lot of the talking. I don't like to do a lot of talking in the initial onboarding calls. Again, that might just be a personality thing, but I feel like when I hear from potential leads and potential clients, when I get a call from them, I want them to do the majority of the talking because I want to hear about their problems. I want to hear about their issues, the things that are coming up for them, so that when I do chime in, I know how to address their problems. Because if I jump in and I start sharing everything that I know about QuickBooks and how I can help them, but it's not addressing their problem, then I'm kind of missing the point and I'm kind of wasting their time. So I let them share their problem first, and then I jump in with my solution. And so, guys, typically what happens is they share their problems, I share my solution, and they ask for a quote. That's usually what they're calling for. They want to know how much it's going to cost to have their QuickBooks cleaned up. And there's a couple ways I go about this. The main way I go about this is I ask for access to their QuickBooks account. So QuickBooks Online is the software I use exclusively. I don't use any other softwares. I'm really firm on that. If they use QuickBooks Desktop, then I'll convert them to QuickBooks Online. If they use spreadsheets, I'll convert it to QuickBooks Online. If they didn't use anything, I move it all to QuickBooks Online. So that's how I do it. And so I always ask for access to their QuickBooks account if they have one. And that's like the first step. So they give me access. I jump into their account and I look at what they have going on. I look at how much of a mess it is. I look at how recently they reconciled the books. I look at the reconciliation reports. I look at their accounts receivable if they have any. I look at their accounts payable if they have any. I look at their bank feed. I check to see how many transactions I'm working with. I'll typically look at like a couple months previous. Maybe we're in the month of October right now. So if I was doing their cleanup work, I might filter the bank feed in the categorize tab to show all the transactions for any specific month. So I might look at the month of August and look at how many transactions did they have in that month, assuming everything's connected properly. If the transactions are not connected to the bank, if they haven't done anything in QuickBooks, and I'm not getting the information I need from QuickBooks, or if they don't have QuickBooks at all, then I'll ask for the last 3 months of their bank and credit card statements. And I ask for all of the bank accounts and all of the credit card accounts that they worked with. And I use the bank statements to determine how much my fee is going to be. Now, if they just have bank statements, then it's going to be pretty simple. I know that they don't have accounts receivable. They don't have accounts payable. They're not keeping track of invoices somewhere. They just have the bank statements and they're kind of working from nothing. And so to me, that's actually a little bit easier than jumping into QuickBooks that's already been used and messed up. So for our purposes, guys, I'm going to assume that I'm doing a cleanup job and not just a catch-up job. So those are different in my mind. A catch-up job is when nothing's been done in QuickBooks and you have to add all the transactions from scratch. That's kind of a separate video. I could go in depth about how I approach that and how I do that. But I'm talking mainly here, I'm talking about cleanup jobs. So I'm talking about a QuickBooks account that already has transactions in it and it needs to be cleaned up. So when I review the QuickBooks, I look for the things that I mentioned. I look at the complexity. I think about how much time it's going to take me. And once you do this long enough, you start to get a feel for what you're comfortable with and what you're uncomfortable with. If I'm really comfortable with it, then it's super easy for me to price. If I'm really comfortable with, what they have going on, then I can pretty easily think in my head about how much time it's going to take me. And if it takes me anywhere between 5 to 10 hours, I'm probably going to charge between $2,000 to $2,500 to do the cleanup job. If I expect it to take more than 20 hours, then it's probably because it's a lot of work and it's probably a little bit uncomfortable for me. And I'm going to have to, take a little bit of time to learn about the client and, figure out things that I haven't addressed yet. Because that happens. Every client is different. And so what I always do is I also charge 50% up front. And so I charge a fixed fee every time. I never do hourly rates. I hate hourly rates. I have a whole video about how I do my pricing. But hourly rates, especially with cleanup work, is a slippery slope because you're penalized for efficiency. And I don't know what it is, guys, but when you present a fixed fee to somebody, it's just it's so much easier of a conversation to have with a client because they know exactly what they're getting themselves into. They know that they know exactly how much it's going to cost, and it's never going to be a problem in the future because they already know and they've already paid 50% up front because you're charging based off of the value that you're providing. So that's how I quote it. That's pretty quick. I have a whole nother video on how I price my jobs. But once I come up with that price, I email the client and I basically lay it all out there. And I say, hey, I give a free diagnostic and I say, okay, here are the problems that I'm seeing in your account. I know exactly how to fix them and this is my price. And what I typically do lately is I'll send, using the new software I've been using since about May. It's called Ignition. It's awesome. I don't recommend it to somebody who's just starting out. Excuse me. But I do recommend it for somebody that has more than like 20 clients, a month. But I send a proposal to them via Ignition with a few different options. I give them an expedited option. I'll charge 30% up front if they prefer to be prioritized above my other clients. And so I'll charge that up front on top of that. And then I send the email. And if they give me the green light on this proposal, if they sign it, if they pay it, then I'm ready to go. I'm ready to roll up my sleeves. I'm ready to do the cleanup job. And the first thing I do is I send an onboarding email. And this onboarding email is basically everything that I need to get started. So it's view-only access to their bank accounts. It's, hopefully they've already paid and they've signed the agreement. I ask for access to their payroll accounts. I ask for access to any spreadsheets, any shared spreadsheets, any folders with documents. I try to get access to everything I can get. Credit cards too, if I didn't mention that. Credit cards, you need access to credit cards. I ask the client to reconnect the bank accounts to QuickBooks if possible. And let's see, what else do I ask for? Oh, their tax return from the previous year. If they filed their tax return, then I will definitely want that because that's really important for the beginning balance entry, which I'll get into that in a moment. And I also one thing I actually didn't mention in the onboarding call. I'm sorry, I'm jumping back. In the onboarding call, one thing that's really important is you want to really ask the question as to like why they want the cleanup work. And usually they'll throw it in. Usually they don't have to ask the question. But if it's just for tax purposes, if they just need to get the books in order so that everything's categorized correctly so that they can file a tax return in their cash basis, then that's pretty easy. That's like the normal. Most people that come to me, they just want their books cleaned up for tax purposes, and that's great. But if they need it for like an investor, if they need it for a donor, if they need it for a potential, partner or somebody else that wants to look at the books, or if they want it cleaned up for like analyzing purposes, if they want to get it cleaned up for a CFO, then it requires an additional level of detail that isn't necessarily required for a tax return. A tax return, you just have to have it categorized properly. You don't necessarily need to have everything broken out in extreme detail. And so that's like a really important thing to figure out before you do a cleanup job is why do they need these cleaned up in the first place? But anyway, once I send that onboarding email, then I'm ready to hit the ground running. They start sending me information. I start getting to work, and basically, guys, I jump into it, and this is how I approach it. So I look at the bank feed first. I look at how many transactions need to be added. Did they add all the transactions in there? Or is there anything hanging out in the for review tab that needs to be added? Is that up to date? Because if it's not up to date, then we need to go through and we need to add the transactions in. And then the next step is making sure that it's reconciled. So if the bank and credit card accounts are not reconciled, then that's very problematic. Because before I even look at the balance sheet or the profit and loss, I want to make sure that everything is in there, okay? Because if I'm missing something, then no wonder things don't look right. So I make sure nothing's duplicated, and I make sure nothing's missed. And by reconciling, you can basically account for like at least all the transactions to make sure everything is in there. And so that's the first thing I do. Transactions, are they in there? Is it reconciled? Are there uncleared transactions in the reconciliation? If so, they need to be addressed. They either need to be deleted, they need to be matched, they need to be cleared. Whatever it is, you have to address the reconciliation. That's really important. So once I've dealt with the reconciliation, I start to look at the balance sheet. And I look at the balance sheet and I look at each account. So obviously at the top of the balance sheet, you have the cash accounts, the checking accounts, and you have like your assets. And so once I've determined that each of the checking accounts are reconciled, I continue to move down the list. If there's anything on the balance sheet that doesn't make sense, if they have like assets like, I don't know, undeposited funds that are like negative or really high, that doesn't make sense to me, and that needs to be addressed. If they have like an uncategorized asset, or if they have like weird accounts like inventory when they don't sell products, if they have, maybe like fixed assets that didn't exceed $2,500, then they don't need to be capitalized and they can be put on the profit and loss statement. So I look at the balance sheet and I look at the assets first, and I tie out each account and I move down the line. And I try to tie it out to a real number. So like obviously the cash accounts, the checking accounts you can tie to a bank statement, but if they have if they do have inventory, then like you'd want maybe something from the client that shows you like the total amount of inventory they have on hand. Or if it's accounts receivable, I would want the client to basically, tell me if things make sense on there. If things don't make sense, then I need to take a deeper dive and I need to review each account line by line. Accounts receivable is a really tricky one, especially if there's a lot of customers, because the name in the game that most people miss, and I harp on this all the time, is you have to match the deposits to the invoices. If the client is using QuickBooks for invoicing, then it's a whole different ballgame. If the client's not in QuickBooks, it's pretty simple. Honestly, anybody can do the bookkeeping if there's no invoicing, if there's no bills in QuickBooks. But if there is invoicing in there, then you have to make sure that everything's been properly matched. And that's really hard to do for a lot of people, but it's really important that you do it right. And so that's what I figure that out. I figure out what's needed for that, and I address the accounts receivable. And the way I handle accounts receivable too is if I see like an open invoice, and let's say it's really old, like more than 90 days old, I'll look at the total invoice and I'll see if the payment's been received. If the payment's been marked as received, but it hasn't been cleared, then you have to go find that payment in QuickBooks. And so you have to look for that deposit. And a lot of times you need to be able to view the deposit images to be able to identify who the deposit was from. If they paid through QuickBooks and it didn't match properly, then you need to look at the sales deposits in QuickBooks to figure out, who that deposit was from and which invoice to match it to. So that's accounts receivable. Then I just move down the line, guys. I go to the liabilities. I make sure the credit cards are all reconciled. I make sure all the credit cards are included. I remove any credit cards that aren't being used anymore. I look at the loans and I make sure that the balances tie. And so if there's interest that needs to be separated and removed and put on the P&L, then I make those changes. And then finally I look at the distributions. Did they post the distributions correctly? The owner's draws, distributions, whatever you want to call it. Sometimes the owner's draws accounts are, used to basically hide certain things. And so if there's a lot in the owner's distributions, then you need to go through that and you need to really actually make sure that everything is indeed personal. If it's a personal expense, then it belongs in the owner's draws category. But if it's business, then you gotta categorize it somewhere on the P&L. So that's my balance sheet approach, guys. I just do it one line at a time. It's very overwhelming in the beginning, but if you just take little bites at it in the beginning, at a time, then eventually you'll get through it and you'll be really happy. Because if you have a clean balance sheet, then you can trust your profit and loss. If the balance sheet is good, then the profit and loss in total is good. Now we'll get to the profit and loss, but just know that the balance sheet is the most important report, in my opinion, because it just ensures that everything is accurate. Okay. So, and I will say on the balance sheet, guys, it's also the most complicated. So if you're not very good at accounting, then the balance sheet's going to be very intimidating and you might have to go back to the drawing board. You might have to go back to your books. You might have to do a little bit more research. You might have to talk to ChatGPT a little bit more and really understand how it works, how accounting works. Because if you don't know the debits and credits, if you don't know that everything has to balance, then it's going to be challenging and you're not going to understand how things are flowing. So once I deal with the balance sheet, then I move to the profit and loss. And the profit and loss, I look at two different things mainly. I look at guys, I forgot one really important thing on the balance sheet. Sorry, I'm bouncing around a little bit. Another really important thing on the balance sheet is the beginning balance entry, okay? The beginning balance entry is maybe one of the more complicated things that most people don't know how to do. It's another challenging part of the balance sheet. If you jump into the books, guys, you don't need, unless they ask you to do this, you don't need to go to a previous year. So let's say someone comes to me for 9 months of bookkeeping work. I don't need to go back to like 2021. I start January 1, 2025, okay? I start the first day of the year and I only clean up the activity from January 1st to the current date or to the end of the month, the previous month. And the problem with that, though, is that if the balance sheet has things that exist previous to January 1, it doesn't go away. A profit and loss, it restarts every year in QuickBooks. A profit and loss will restart, whereas a balance sheet doesn't restart. A balance sheet carries forward balances year over year, month over month. And so you have to make sure that the balance sheet is correct at the beginning of the year. And the way you do that is through the tax return. So that's how I do it. I use the previous year's tax return to determine the beginning balances. Now, hopefully you have the tax return. Hopefully they filed. If they didn't, then, there's just nothing more you can do. You'll have to do your best to kind of use your own judgment. Like, does it make sense or not is kind of how I think about it. But if you have a tax return, then you have to look at the balance sheet on the tax return and compare that to the balance sheet on QuickBooks, and they have to tie. So as of 12/31/2024, you're going to need to make an adjustment, a journal entry, to basically get the balances to tie. So if there is an inventory number that's different, make it tie. If there's fixed assets that were on the tax return but they're not on the QuickBooks account, then you need to do a journal entry to add them in. Same with accumulated depreciation, or with loans, or with maybe there's like draws or contributions. Those need to be closed out, and they need to be closed out into retained earnings. If what I'm talking about is way over your head, then maybe you're not ready for a cleanup job. Maybe you need to outsource it to somebody like me. That's fine. You can give it to me, or you can give it to somebody else. Maybe that's what you need to do, or maybe you just need to really hone in on your accounting skills. But that's what I wanted to talk about with the balance sheet. Let's move to the profit and loss. The profit and loss is the other report that works in tandem with the balance sheet. And the thing about the profit and loss that you need to focus on is, does it look good? Like, does it make sense? And so there's two things I look on the profit and loss, two reports. I look at the profit and loss by month. So I look at the profit and loss by month, and I love that report because it shows me kind of high level, not in too much detail, but it shows me high level the trends in the spending. I can look at, I can take a look at different things. So I look at the revenue. Do they have like a bunch of random revenue accounts? Can they all be consolidated into one account maybe? I look at the cost of goods sold. Maybe there's certain accounts that need to be put into cost of goods sold that were in the expense section. So I kind of reorganize the chart of accounts to make sure that like things aren't duplicated or redundant. I look at the payroll. I tie out the payroll to make sure that they agree with the payroll reports. It's really important because you want to show the gross payroll. So if you pay somebody $10,000, that's the amount of money that should show up on the payroll line. And then the taxes should be separate from that. And so the payroll needs to be grossed up, as I like to say. What else do I do on the profit and loss? I just look at, I make sure everything kind of just looks right. Like if there's big swings in spending, if there's like a big $20,000 negative expense somewhere, I'll move it. And so the profit and loss is all about moving things around. And so it's jumping in, clicking the detail, figuring out, does this need to be in a different category? Sometimes you'll see wacky things like meals being placed in office supplies. And so you just need to move that around to put it in the right buckets. And then the next thing I do is I look at the profit and loss detail. So there's another report called profit and loss detail. And I look at this to make sure, and I'll look at all the detail. After I've done the reconciliations, after I've done the balance sheet, I'll look at all the detail and I'll just kind of like scan through it and I'll scroll down. I typically export this to Excel and I look for anything that might catch my eye and I recategorize it in QuickBooks. And so it's kind of hard to explain. I really like doing this work because there's such a big difference, especially in the P&L, when you can clean it up properly and when you know what you want it to look like. And so guys, that's basically what I do. So it's the balance sheet, it's the profit and loss. It's a lot of questions to the clients. I try not to bombard the clients with too many questions because they're coming to me as the expert, and obviously there's going to be things that I'm not sure about, but I'm also going to have to use my own judgment sometimes. And a lot of times I can use the previous year's bookkeeping to determine how something was categorized in the past. But if there's something that's really, boggled me and I'm really not sure, then I will, ask the client. And I'll typically send a few emails to the client. I'll try to consolidate all my questions into one email, and I'll do my best to just keep it easy for the client. But guys, that's basically it. So if this video is helpful for you, then please like this video, subscribe to my channel. I really appreciate you guys, and I hope these videos are helpful. Thanks.